Good morning, good morning, good morning, everybody. It is Monday. Red on your screen here, Monday. Remember, Monday. Monday, 5:30 in the morning, April the 8th. According to this, it is 86 degrees over here, which is wrong. It is a hell of a lot hotter than that. FinancialJuice.com news just came out about 20 minutes ago. Taiwan Semiconductor gets an $11.6 billion U.S. grants and loans for 3 chip plants. Taiwan Semiconductor agreed to $6.6 billion subsidy for Taiwan Semiconductor Arizona chip production. You don't need to be a rocket scientist to think that, oh, okay, so how many years is it going to take for them to build the plant? But anyway, Mini Me, Secretary Yellen is out there talking about China is allowed to sell EVs in the U.S. There are no rules against it. I'm confident that inflation will continue to come down. Who cares? Who cares? We are going into, damn, I didn't open it. I didn't open it. Hang on 1 second. Okay, through the powers of pause and continue, we are back. Going over the email that I sent out yesterday. Solar eclipse is today. Solar eclipse is today, and it will be taking place roughly around 12, or I apologize, 1 ish, starting way up in the East Coast, close to Maine, and crossing over the US all the way down through Texas. As it gets to Texas, according to the time schedule, somewhere in the late 3 o'clock, 4 o'clock range. Solar eclipse. It's a full solar eclipse, so something to be aware of. We also have the new moon today. Nothing on Tuesday except Taco Tuesday. Wednesday, CPI report, very important, and the FOMC minutes. Thursday, ECB rate decision, PPI, Friday, earnings, and again, I will make JP Morgan my bitch, just like we did 3 months ago. My 32 trade plan on JP Morgan did not work out because of that 193.87. And Friday is coming up, and all of you who have been around with the JP Morgan from before, you know that it's coming. So, yep, we will have a new trade come out on Friday with JP Morgan, and we will have a 0 DTE on JP Morgan. May 17th, QQQ 430 puts still in play, up at the moment from the last entry. And again, I would choose the May 17th 440s if I was to get in now. January 17th SPY 510 puts, blah, blah. And the active play, I had the price wrong here. It is not 162. It is, in fact, let me see, 137 is where it closed on Friday. So that was from the update prior on the last week, Monday. But again, same thing holds 207.21, 203.69. So IWM, you got another week, but yeah, things are not looking rosy on that IWM. Monday starts the week green, red. 14 weeks of the year. 4 of the weeks have been green. 3 of them were in January. 1 was March 18th after the plus 40-point gap up the Friday before. As you saw there on April 1 last week, nice and red. That was why we had the trades that we trade. VIX 1622 warning. Again, it is a warning when we get to that 1622. But as I shared, we have continued to have higher highs and higher lows going all the way back to December. So there is something brewing. But again, looking at that big major fall down trend line, which trend lines, okay, I only look at them if they are exact to the actual minute where the candles are drawn from one point to another. This is only a rough drawing, is all it is. But we will be coming into play with that trend line right at around 17 ish. So, again, something to be very aware of is all that it is, nothing more than that. Negative for the month using the open again. And as you see here with the SPX, we had a red week. Red weeks are not things that we normally get. Now, here is your bigger, broader, wider view on the SPX weekly. We have never, even when we went into the 2022 highs, we had not been this overbought on the weekly. And here we are continue to be overbought since going way back into November of last year. Zooming in, why I say this is, again, we got a red weekly candle last week. That is 1, 2, 3, and 4. 4 red weeks out of this now, I forget the number, 23 or 24 weeks. I believe it's 23. Out of 23 weeks, 4 of them have been red, which is why I share to you, having had to go back to prior to when I was born, what took place there in the 1969, 1970, 1971 region. So again, bring you back through here, looking over the chart, lows of the months again. But go back to that red on the week. 1, 2, 3, 4, 5. First 5 days of the month, we are red. That's what we had here at the first week of January. 1, 2, 3, 4. First 4 days of January, the first week, red, 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 red. Got our first red candle going back to when we started on October 27th. And then boom, we exploded. But here we are, red, 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 red. And again, all we did was dip. That's all that we got last week. We're still looking for proof. So the solar eclipse is today and the new moon is today, and that's why I shared the chart on the new moon. And again, I applaud the 3 of you who messaged me who said that you went in there and you looked at the new moon and you looked at the full moon, and you can't believe what you see. But yes, in fact, that is just the way that it works out. And on the 0DTE video that I promised over the weekend, number one, I had a couple of computer issues, so I was dealing with that on Sunday. Saturday, I only did the one-on-one calls, and I appreciate those of you who took the time to do that. But also, our dog, our female dog, was in heat, and Saturday night, while I was doing the one-on-one calls and I was watching her walk over towards the guest house fish pond, she took off. So we've spent the better part of Sunday and today hunting around the area trying to see if we could find her, and no luck yet. But yeah, again, yesterday, looking over at the email, 444 wasn't a joke. Well, you're going to get that in Thursday, August 8th, you're going to get 888. So bring on to the charts, because I think we've wasted everybody's time enough here. And looking here at the futures, ES futures, dead flat. Down about 3 points, but dead flat. We are below the 10-day, below the 20-day, and hovering on the 5-day moving average. Right around there where we were supporting last week when we had that initial little dip, that's where we're resisting right now. So, touch and go, touch and go. Over on the NQ, again, same thing. Below the 10-day, below the 20-day, and now we are again hovering on the 5-day, where again we supported somewhat in the middle of last week on that little dip on Tuesday and Wednesday. 50-day moving average, we did make contact with that on Thursday. So we are going to be continuing to monitor whether or not we take out this week's lows, because obviously taking out this week's lows would mean taking out that 50-day moving average. Looking over here on the Russell 2000, and the Russell 2000 getting very compressed, having not really moved much. 10-day, 20-day, 5-day, all above where we currently are on this 2084.40. 50-day moving average below last week's lows. So once again, something to continue to monitor, with the 50-day moving average being right around the 2024 open. And finally, over here on the YM having broken the 10, the 20, the 5, and the 50-day on Thursday's drop, and hovering above the 50-day moving average as of now, with the OPEX rollover contract gap having not been filled yet and sitting right below, and quite a few other things sitting just below here. Looking right there at a 5% drop if we are to take out that March low, March 5 being right over there, essentially taking out the entire month of March, as we are making very good progress in doing so. And let's play around with this. If we were to be looking at this and saying, okay, let's use the Dow. We looked at this and saw a very clean A, B. We almost took out that C, but if this is the 1, 2, and this being the 1, 2, and now we are going to the 3, we'd be looking around here around this 38,200 level, which would take out the March lows, which, bringing everything into play, would be looking right around that 100-day moving average, not the 200-day, but would be looking right around the 100-day moving average down there. So again, just looking at it for what it is. Don't know what it is until we see what it is, but everything is definitely starting to make a turn. I believe that's it with the futures, so I'll move on over to, again, with the SPX. The bearish move that we were looking for, 1, 2, 3, 4, 5, 51.50 plus or minus 10, we got 51.46. So, call it what it is. The move back off of that, right to move these studies. We moved right back to the 61.8 retracement of that drop, hit it, quit it, and dropped right back down and are hovering with the close right there in the 5200s. So again, one close in the 5100s. That's all that we did. So that is going to be one of those, I don't believe you. And that's the reason why you have your risk trade that's on there for today. The risk trade being the 5210, 5205 calls at $3 last night. They were trading right around $1.90 a few minutes ago. And also over on your 0DTE addicts. The April 8th 5150 puts were at 260. I saw them earlier this morning trading a little bit over $3, but we're not getting much movement. So again, remember the solar eclipse is in the afternoon. The reverse repo is in the afternoon. And we don't have anything on the schedule for today. So nothing to go out there and get excessively aggressive about. SPX, looking at it from our detailed chart, 10-day up above, 5-day where we closed, 20-day right below us where we supported on the middle of the day on Friday. And again, only a 2.25% dip, still not breaking out to a humongous dip where the biggest dip we have had since October 27th is 2.5%. A lot of gaps, an excessively large number of gaps, but we are zoomed in. And the reason we are zoomed in is because, again, with the QQQ, all we're doing here is hovering on this 440. 444 is failing, below 438 keeps supporting, and we've been doing this now for the better part of 30 trading sessions. So I bring you to a couple of things that you need to be aware of, which is crude oil. Crude oil, looking here at a 30-day and looking here at a bigger view with a 90-day. Things are brewing over here in crude, and I shared that over with you in the email. And a major oil facility went offline down in Mexico, about 11 million barrels a day, with a major fire that took place. Something to be aware of. We are not in that, oh my God, breakout mode, very similar to where we got up to in the 95s in September of last year, but we are definitely heading towards that. From a wider point of view, yeah, crude is looking on that 95 area at a possible breakout. So be aware. Bring you back in and bring you to the VIX, which always the VIX. Again, bit of a warning being up here at 1622. The VIX always gaps up on Monday. Always. Let me see if I got it here. Equities show options, futures. Yep, we're looking at extended period. Always gaps up on Mondays. We got a tiny little gap up, but it did gap up. But again, 1622, major warning area. And removing these studies. Big warning being above and below 1622. Above 1622, you're looking for it to fail, only because that's the way that it's worked for a very, very long period of time. Below 1622, you're going to hope that 1542 holds. And that's exactly what took place there on Friday. So bigger, broader view on this is a lot of caution, but more importantly, for those that are thinking that they're going to go out there and buy the dip, that's exactly why we shared everything that we did in the email, because it is possible, it is very possible that we could have had, that bullish, forget this. It's very possible that we could have had that number 4, and now we are looking for wave 5, and wave 5 taking us up 5307, 5332. Two things are in play. CPI, that'll be out on Wednesday. CPI has not been good. As you can see here, November, December, January, February, March, continuing to climb higher. And we have CPI coming out here on Wednesday. Very, very cautious. So again, looking at this from could have missed a wave. 1, 2, 3, 4, 5, 6, 7. We should be looking at one more wave to the upside if this was to be 9, being that you need it to be somewhere in there. But again, these waves, very tricky to count. And I am only going with the, okay, we don't drop. We always go up. That's the point of view that I'm taking on that. And again, if that is to be, we're going to need to see 52.57, 52.65 taken out to potentially see 50, 60 points higher than that. So you've got about 1% up to your upside and bringing us back to the SPX. You have a whole lot of gaps. A whole lot of gaps. Enjoy your Monday, guys. It's going to be a theoretically red Monday, but we're not looking for a drop because tomorrow's Taco Tuesday and CPI is on Wednesday. Enjoy yourself.